I placed a very safe covered call trade 2 weeks ago, and I want to go over that trade as well as give you 2 new trades that you can place for April 2025. Now is a really interesting time. The market's rebounding, and using covered calls right now to generate income and give yourself upside is a genius move. I respect your time, so here's the 3 trades that I'm going to make in this video. The first trade is going to be Kraft Heinz. I'm going to show you an old trade as well as how it played out, and I'm going to show you a new trade on Kraft Heinz, what I see happening for April. Then I'm going to go over Palantir and Sofi. No fluff, let's not waste any time. Let's watch this 3-minute clip on opening Kraft Heinz, and then let me give you a new play on it as well as the other 2 stocks. Now you're at the portion of the video where I'm going to do some live trading, and we're gonna go over several stocks. I'm going to run a covered call on them and show you step by step what I look for, how I pick the stock, and how I pick the strike price of the option, and then how I manage the position until close. So the first stock I wanna go over is actually going to be Kraft Heinz. I've spotted this opportunity because over the last 6 months, the stock is at a very low, and over the last 1 year, it's also at a 52-week low. So the stock has traded down for the past 1 year. It's actually down 19.75%. I like Kraft Heinz because it's a Warren Buffett company, and Kraft Heinz business is kind of hard to disrupt because it sells ketchup and food products. So if you take a look at the PE ratio, it's 26, and the beta here, I want to point out what beta is. Beta is like how sensitive the stock is to the stock market. So if the stock market moves, let's say 1%, then this stock is going to move 0.5%. It's half as sensitive as the stock market is. So it's a very low volatility play, and the market cap here is 34 billion. I like that the dividend is 5.46%. So what I'm going to do, if I go to chart right here, it's basically not very hard to tell that since the stock is at a very big low and well below the moving average as well, the moving average is 29.55, that I can easily sell a covered call option. So what I'm going to do, and because I am making this video special for you here, I'm actually going to open up 100 shares, and I have to buy 100 shares first. But of course, if you already own a stock and you have 100 shares of a stock, then you can sell a covered call option on any stock that you want. Only thing that you have to have is 100 shares of that stock. If you have 99 shares, you can't sell a covered call. And if you have like 173 shares, I would tell you to buy 27 more shares so you have an even lot size of hundreds, right? So 200. So you can sell 2 covered calls. And to be honest, like this is a trade I actually like, so I can buy 500 shares here. So I'll go to review order, and then I will click buy. So obviously buying the shares is like really easy. All you have to do is just place an order to buy the stock at market price, and then you'll get the stock, right? So I just purchased 500 shares and I spent $14,000. So far, I'm not gonna count that in how much money I've made because that's just stock that I hold, right? So if you hold stock, the whole point of a covered call strategy is to generate income on stocks that you already have or stocks that you just recently bought. Buying the stock doesn't really count towards the premium that you collect. I'm only going to be counting premium in this video. And of course, I do want to let you know that the premium that I collect, it's cash in my account, but I still have to wait until expiration for, that option to actually expire. So now that I have 500 shares of Kraft Heinz, what I'm going to do, and I'm up already $13. What I'm going to do is I'm going to go to trade Kraft Heinz options, and I'm going to go sell a call option. Now, for a really slow stock like Kraft Heinz that has low volatility, there's nothing wrong with just going out like a lot farther in the future. Maybe it's 2 months, maybe it's 3 months, something like that. So you can see here how the closest strike price is going to be 30, and the delta here is 0.39. The implied volatility is pretty low, but again, we're just looking for consistent income. When I do covered calls, I'm looking to capture in premium and hold high quality companies. Kraft Heinz is a high quality company and it's at a 52-week low. So what I see happening is that the stock could rise to $30 per share, and this right here is a covered call at 30. So if Kraft Heinz goes up, well, we're still going to experience a gain from the current price of $28.91 to $30. So you get a $1 gain, plus you also get the premium here. So the premium here is $72. What's awesome is you can kind of say like this is a triple income play because the stock can go up, it pays a dividend, and this covered call also brings in income. So you have like 3 ways to make money with a covered call like this. So this is a 30 call. It's going to expire on April 17th, and I'm going to click continue, and I'm going to do the 5 contracts that I have since I have 500 shares. So I'm going to input $73 right here. And again, this is not going to be like a lot of money, but hey, it's good, consistent money. So I placed that trade and boom, we got filled. So we'll put on the bottom of the screen here, $369.80. All right, so actually I added to that position and now I have 3,000 total shares of Kraft Heinz. I bought 2,500 more shares and you can currently see I have 5 covered calls on Kraft Heinz still. Now that position ended up making 58% of the premium or $215 on the original 500 shares. What I'm planning to do is actually add to this position and open up more $30 covered calls on Kraft Heinz because Kraft Heinz has a really good dividend. You can see I got paid $200. I actually got assigned on Kraft Heinz. So if I scroll down here, you can see I got assigned on the 30 put and I got assigned for $75,000. So what I'm going to do is I'm going to run the wheel strategy. I get assigned and now I'm going to do more covered calls on Kraft Heinz. With that being said, let's go into the second stock, which is going to be Sofi. Sofi has had a really strong recovery. Sofi went down all the way to almost $11 per share and this stock was just oversold at that point. So you can see right here how the RSI was under 30, meaning that Sofi was absolutely oversold and now the stock is at $13.54. I think a very smart covered call right now will be the 14 covered call for April. So, you know, Kraft Heinz, we're doing a covered call slightly out of the money. Same thing with Sofi, a covered call slightly out of the money. And that gives you premium plus it gives you some upside. Now going on over to the next stock is going to be Palantir. Palantir, I have 2,600 shares. It makes up about 6% of my portfolio. I'm up a lot of money on Palantir. It's about a $250,000 position. Now Palantir has had a big recovery and Palantir in the past 1 month has had some very volatile performance. This stock went all the way as low as $75 per share and even, $75.12. Now the stock is recovering a lot and Palantir has finally found some stability. I think Palantir is a super strong stock. Obviously they're in the AI space and AI in general is a really strong bet for 2025. There was some volatility. People had doubts in me, but I'm still here. I'm still holding my position. I'm still bullish. So, you know, I think it's business as usual and we're going to see more positive momentum in the market. So the trade that I have for Palantir is going to be right here. You can see I opened up 98 covered calls. I ended up doing that today and that's going to expire actually this Friday. So it's a very short-term expiration. And due to the choppy market, I am trading in shorter time frames. And the reason I'm doing that is because, there's more volatility. There's a lot of choppiness. So I want to make sure that I get my income, I get my premium coming in without having to, open up options that expire way out into the future. So what I ended up doing was opened up 98 covered calls on Palantir and we go down to my history, you'll see that I ended up collecting $4,160. I did that during my trading call today in my Discord community. And this $4,160 is going to be really good because it's income coming in, but also I do still have some upside on Palantir. It's not a lot of upside. I can only go up to $98 and then I'm capped. I can't make more than $98 per share because that's my covered call strike. And a covered call, again, gives you income, but it caps your upside. So that's like the negative or the opportunity cost that you give up when you're doing a covered call. Now, real quick, I'm going to explain to you why covered calls are so powerful, why I think it's the best strategy, and how actually back in college, I shadowed a financial advisor and he was managing NBA player money. And I shadowed him. I basically worked alongside with him for a period of time. And I got to understand that covered calls are the safest strategy for high net worth individuals, for medium account sizes, for bigger account sizes, of course, and even small portfolios, because you can open up a covered call on a cheap stock, such as Sofi, such as Heinz has been really good. NEO has sold off a lot, so NEO is a good covered call as well. And just in general, covered calls are the ultimate retirement strategy because you get income, you get safety, and guys, at the end of the day, the craziest thing is option trading is safer than stock trading, especially when you're in the option selling side. When you're selling covered calls, you're collecting income, you're collecting premium, which reduces your cost basis. So if you're thinking between, how do I protect myself and how do I create income? Well, you don't have to give up one for the other. You can actually do both. You can reduce your risk, create income, and have upside with covered calls. Now, last but not least, I wanted to mention something that I'm doing that's really interesting. And this is something that's kind of crazy, but this is my last year that I'm going to be coaching, and I spent 2 weeks creating a course. I spent 11 days, all day, 12 hours per day, creating a course of everything I know, and I bundled it into a boot camp as well. So I wanted to put this down in the description. This is going to be the once and only time that I'm going to do this, and for the next basically 10 or 11 days, I'll be having this opportunity where it'll be my last time making boot camp, where I will be coaching hands-on, 3 sessions, 90 minutes each, as well as a full option trading course, which took 11 days straight, 12 hours a day. And I haven't made a course for 5 years now, but I wanted to collectively put all the knowledge that I had and basically put it into one program. So if you're interested in this, click the first link in the description. It is kind of like the last time I'm ever going to do something like this. It's an absolutely insane value. There's a lot more details on the webpage, which you can watch right here. It's a 9-minute video, but it'll be well worth your time because I explain why I'm doing this, why am I offering such a boot camp course and basically a retirement special. It has a lot to do with me coaching for my last year, but it's also just something that I wanted to put together and put everything that I had into it. My team instructed me to charge a crazy price and I said, no, I just wanted to give everything away. And I explain in this video what this is going to be about, how long it's going to be, and all the details. So if you're interested in that, click the first link in the description. I also send it to your guys' email if you're part of my email list. Real quick, I'm going to cover the wheel strategy. I'm going to talk about entries and exits and risk management, maximizing your portfolio. The second session is going to be all around safely scaling your portfolio. And the third session, which is, they're all going to be about 90-minute sessions or even more because I'm going to be teaching a lot, asking questions, answering questions, sharing PDF, sharing strategies and research that I don't share on YouTube because I'm going to go in much greater detail. So again, I don't want to make this video too long, but if you're interested, go ahead and check that out and I'll catch you in the next one.